Hey YouTubers, K here from the Brain Booster Academy. So we have the following topics that we want to cover over the next couple of weeks. Videos will be in the form of theory blended with a few examples so that you're clear with your concepts. I'll stick to this order because it worked for me. If you prefer a different order, feel free to choose from the playlist displayed on the top right of your screen. Also note that GRE and GMAT Quants don't attempt to actually pressurize you with time. So don't overburden yourself with too many complicated formulae. Just work on the base level concepts and you might actually have time to revise through your answers. Trusting formulae and not your concepts can actually mess things up without you realizing. So just get your concepts right through these videos and you're good to go. Alright, so let's get started with our today's topic, profit and loss. Now, profit and loss is an everyday occurrence. Let's say the United States government plans to sell some weapons that costed them $1 million to make. Now, North Korea bid $1.3 million. So the difference, $0.3 million, is the profit of the US government. Now, let's say North Korea finds the world too peaceful and it doesn't want to store all these weapons. So they planned on selling it to Russia. But Russia wasn't willing to pay more than $1.2 million. So North Korea sold it at a loss of $0.1 million. Now, how did we calculate this profit and loss? It's simple. The difference between how much you sold the item for subtracted by what you paid to have the item or to manufacture the item is the profit or loss. If it's positive, it's a profit. If it's negative, it's a loss. An added pointer here is the profit percent or the loss percent. This is simple. It's basically the profit or loss divided by the cost of the item into 100. So for the US government, it would be $0.3 million by $1 million into 100, which is 30%. Alright, now let's look at a different concept, cost price, marked price, discounted price and sale price. Okay, so what do we have here? We have Harry, Ron and Hermione. Now Ron wants to buy a wand for $120. He was running out of money and he planned to sell it to Hermione, who wasn't street enough to know the actual rates. So Ron marks up the price at $150. This is the selling price to Hermione. Now Hermione wants to, make a profit for herself and marks up the price while selling it to Harry. She marks it up at $200. That is a marked price. But then again, Harry wants a discount. So she offers a 10% discount, which Harry agrees, and that would be the selling price. So what do we have here? Ron firstly sells it at a profit. What is the profit? It's $150 minus $120, which is $30. The profit percentage is $30. That is a profit divided by the cost price for Ron, that is $120 into 100, which is 25%. Now Hermione marks up the item at $200. This is the item's marked price for Harry, or let's say the base price or MRP, advertised price sort of a thing. After that, there's a 10% discount. So effectively, the current item's price would be 90% of the marked price. 100 minus 10 is equal to 90. So that is $180, 90% of $200. This is the selling price for Hermione or the cost price for Harry. Overall, what is the profit or loss percentage for Hermione? Well, this is simple. What was the final cost price for Hermione? It is $150. What is the selling price for Hermione? It is $180. So the profit is the difference of the two, which is $30. Or in other words, a profit percentage of 20%. Alright, a final topic that we have to cover is successive discounts. So let's say you want to buy a t-shirt and you see an ad saying 20% plus 10% discount. Is that 30% discount? No, it doesn't really add that way. So what is the actual selling price? Well, it's simple to calculate. We take an assumption over here of $100. The cost price is $100. So the first discount of 20% would mean 80% of the mark price of $100, which is ultimately $80. The next discount would be of 10%. This would be on the existing price. So 10% discount would mean 90% of the price of $80, which is $72. The final selling price is $72, and therefore the total discount is the original sale price minus the current sale price, that is $28, and the discount percentage, that is discount by the marked price into 100, which is $28 by $100 into 100, which is 28%. I hope this was clear. A few quick pointers for this video. When no values are given, it is smart to assume a standard amount like we did just now with a $100 cost price. This generally works while we are dealing with only percentages. When you have specific values for the cost or marked price or the profit or loss, then it might get complicated, which you'll gradually realize. Also, markup price means when the price is marked up as compared to the existing price. Thirdly, don't assume the final profit or loss. Often questions will confuse you by giving some percentages and then giving some values, and it is hard to assess the final profit or loss. Also, like in the last example, there are faster ways to calculate percentages. Instead of breaking up the 20% discount and the 10% discount separately, we could have just done 100 into 80 by 100 for the 20% into 90 by 100 for the 10%, which would also give you the final selling price of $72. This again comes with practice. So these are all the theoretical concepts that you will need for profit and loss. I hope it will help with your practice. Questions are not generally calculation intensive. However, it might try and confuse you with several numbers, so beware. Note down all the pointers over here, go through it, and then start practicing. But hey, do hit the like button because I know you did. Also the subscribe button and the bell icon, because if you are a serious candidate, you do not want to miss any of my videos. And finally, let me know through comments any pointers or doubts that you have in your mind. See you in the next video. Until then,